A dividend is the amount that the company pays to the investors who owns the share in the company. A dividend yield is this dividend amount divided by its share price. Consider company A stock is trading at $20 and pays annual dividends of $1 per share to its shareholders, and company B stock is trading at $40 and also pays an annual dividend of $1 per share. This means company A's dividend yield is 5%, while company B's dividend yield is only 2.5%. Assuming all other factors are equivalent, an investor looking to invest would generally prefer investing in company A, as it has higher dividend yield. So, next time if you come across the term dividend yield in your brokerage firm and want to calculate how much dividend per share the company gives annually, simply use this formula. In this case, the dividend paid by the company is approximately 72 cents annually per share. It is also important for investors to keep in mind that higher dividend yields do not always indicate attractive investment opportunities, because dividend yield and stock price are inversely proportional. If the company is not doing good and stock price is going down, dividend yield may appear high. So, if you're looking for investing in stable dividend yield companies, always watch out for established companies, which has a history of good earnings and growing dividends. Thank you.